I think that, I mean, just to emphasize what Diane told was very right on the large transaction. I mean, these large transactions have been driven by who? They've been driven by international investors that know the market. I mean, they've been in the French market forever. Well, they stopped investing, they are back. So it's interesting to see that all these big investors who have expertise, they are coming back in the market and doing this large transaction. And you know, if you look at all these U.S. investors' track record, they are going to tell you that they lost a lot of money in Germany, they lost a lot of money in Spain, but at the very end, what they've done in France was very stable. Okay, so I'm not answering your question on the political, and I don't. I mean,
why not?
Yeah, why not? But you know, I wouldn't say there is a strong disconnection. What I would say is it's exactly what Nick said on the French market. I mean, overall, it's a large market, it's a liquid market, and it's a stable market. And I think this is what drives all these big investors who have been very good expert investors in the French market.
Okay, good. Yes, go ahead, Diane.
Yes, just to come back for a second to the occupiers market. I mean, we have had a recovery on the occupiers market. Yeah. Does that, so the investment market doesn't, I mean, it's not completely disconnected. Yeah, it's disconnected, but it's probably taking already today. Why do we have this this big trend and positive trend on the occupiers market? Because one, investors or occupiers, I think, try to take benefit from the lower prices. When you take La Défense, for example, we have had a lot. There's still a high vacancy rate, but there were some transactions, some big transactions in La Défense. And why is that? Because people, I think, anticipate rents and prices going up in La Défense. So you have seen some big transactions in the French market this year where the tenants have tried to benefit from a little lower rents because the prices have been adjusting in some areas, I think.
Okay, good. Yes, Mike, go ahead.
Yeah, I just wanted to say one other thing about, you know, is there this disconnect between the real economy and investor demand? I think there's been a trend to try and chase distress situations across Europe, and actually there weren't really many in France to start with because of the robustness that my fellow panelists have talked about. I think why investors now really looking at Paris, I think there's a debt market there. 2 years ago, there was about one bank prepared to do anything over about 50 million. A year ago, there was probably 8 to 12. And today, there's an enormous number looking to do really big ticket deals. So if you combine those very low interest rates, you combine it with some pretty robust property with good income, that will then get to the type of returns that global investors are looking about when they've pulled away perhaps from the 20% returns to the mid-teens returns, and that's all very achievable in what has fundamentally been an incredibly robust market.
And so debt, in your sense, has been one of the drivers,
particularly for larger deals.